Very much. It is insane how much you can change in 2 weeks if you just work, and on top of existing, compounded, compacted, like snowball already affected in play experience. That is a big word. But anyway, but I'm not trading Munio's approach. The 6 steps, I do think it works and it is profitable, but I honestly think, out of no distorted perspective, it's not really tailored to me. Let's just say that, right? Um, it is a flow based approach. Blah 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 blah. I'm not going to go into it. I can't be asked to ramble about every single thing I go into. But anyway, I'm training the standard strategy, which is what I've been training for a very long time, and um, what was I going to say? Yeah, and what I first started to trade, what led me to profitability, aka assessing how like traders have been trading like throughout each of the time frames top down as of now, and also, this line here, I've re-added it because it kind of helps you to understand where the market's actually auctioning at and what prices participants have available to pair it with now, and it helps you locate more, like, better where, like, participants are trading at and compare how they've previously been trading, like, in amongst whatever trends in play and the degree to what sort of imbalanced, biased, favoured intent, interest, conviction, and preparedness to interact with the prices the market's sat at that whatever region is present now, it like is likely to be in, like, so basically what region amongst the relative in play and pushed being looked at the market's at, and what degree of conviction over time periods relative to the chart perspective looking at. In this case it would be weekly. Participants are likely to be swayed towards interacting with the prices that are available in the vicinity that the market is sat at now, and that leads me to go on about the weekly. Right now, the market is kind of set at prices still that are likely to be perceived as primarily of worth to be buyers at. Um, anyway, I did digress, but just wanted to say that's why I've re-added it, because it kind of helps you understand like where the market's actually situated at right now. Of course, it's good to look at how the market's set up as of the most recent bar close and just focus on that, being like, okay, well, what degree of imbalanced intent and how imbalanced is that, whatever whichever side of the market's been had the most interest weighted towards a like exists like as of the most recent bar close, and therefore assessing how over the next in play time period participants are likely to be swayed towards interacting with the prices what define the market, and how they're most likely to be inclined to do so, and what degree of imbalance conviction exists as of the most recent bar close and is likely to also remain at the prices to some extent of that relative imbalance. It would, I mean, for example, here, the degree of ratio percent wise, meaning like 60-40, 30-70, intent and interest and conviction to trade with one side of the market and ultimately follow through with that and take action and do so, exists like, is probably likely to be more biased bullish than bearish, but it is likely to decrease as the market goes up based on how they've traded like up as of now and what sort of intent and degree of imbalanced conviction with whichever side of the market being interacted with, which is the buy side on this occasion, was so up to this point. But it is likely that participants are likely to be willing buyers in this region relative to the weekly, of course, because if you were looking on the 1 minute, this would just be huge. It'd be cover your whole screen. I mean, this is from like 489 to, I would probably say, about 372. So that's a good little range, to be honest, of vicinity slash region of prices, what the market's been traded at, and what conviction was lasting up to this point, and how imbalanced traders were with the side of the market that had been most interacted with, like up to that point, and how they were still likely to interact with the prices that the underlying product was set at this region, you know? So yeah, that's why. But yeah, anyway, so I've just been trading I'm just trading the standard strategy, which is what I've been trading since about July last year, so it's coming up a year, and I've been profitable with it since I started because I had existing experience. Blah 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 blah. I am also swapping out. Well, I'm not even going to call it Approach Two because Approach Two is specifically money O's. It does work, so I'm just going to keep it there, but I'm not going to trade it. I just don't like it. I just simply don't. However, I am also trading something called Approach 3, which is basically looking for a strong 9-hour trend and then backing that trend up with all there also being simultaneously a 3-hour strong trend in play. Basically backing up the vicinity of prices what the market sat at as of 7, being globally slash universally perceived as of worth to pair up with in a certain fashion, and for those prices to ultimately be paired up with in a certain fashion and get on board with that trend basically. Now that was there was actually a loss this morning on that with that approach, but I think I've got the data here. Let's have a look. Oh my goodness. So and then as I'm just loading this, so yeah, you can see sufficient anatomic bar close sat amongst an existing already in play trend, which is kind of like newly emerged. You can see the data here, so I need to add a loss to this. And it's like already existing in play, and then the way traders traded like amongst the most recent bar close, like backed up the case for like that intent to trade still likely to be the trend slash bias slash way traders are swaying towards predominantly trading the underlying product like at this region. Um, and it's basically a derivative of the standard strategy because we are actually short right now. Now I know I'm jumping all over the place here, like not with markets but just with topics, but um, basically yeah. So you'll look for a sufficient 9-hour bar close prior to 7, basically establishing a 9-hour strong trend that's in play, meaning like being a imbalance, like a strong heavily degree of imbalanced conviction to trade with a particular side of the market, and the price, and with the prices available as of the next recent bar, as of the next bar close being opening at 7, participants' conviction is likely to still remain as heavily imbalanced and swayed towards interacting with one side of the market than the other, and then basically you'll back that up with the 3-hour confirming that case. So like for example here that was the case, and then you literally, so like for example here you would mark out, I may as well just actually mark it. I'm just gonna, just so I remember, I'm actually gonna do something real quick. Because we were looking at it yesterday too, but nothing formed. Yeah. And then as you see, there is a strong sufficient anatomic bar close that's snug amongst an existing in play 3-hour trend, and that 3-hour trend like was therefore led to be set up as poised to continue pushing, and the logic behind that is that market participants imbalanced biased like inclination towards interacting with one side of the market over the other is existing as heavily imbalanced with the prices that the underlying product is available to trade at this region falling at 7, and therefore likely to remain the case from and over the next 3-hour bar close, and also backed up by the 9-hour bar close being like the stronger trend relative to the 9-hour 2. So it's just very likely that the prices that are which a 9-hour closes at 7, so does the 3. So that's why I paired this up together, and it's very likely that the prices what are available to pair up and trade with, that trade the underlying product at as of 7 in that vicinity, are likely to be met with market participants in possession of a strong inclination towards primarily and solely interacting with one side of the market being a very strong imbalanced degree of conviction to trade the underlying product in a certain way, leading the push to be set up in this fashion, and likely to continue pushing, running over the course of European and modern trading session. And anyway, so like this is what I look at on the standard strategy. Anyway, so what I'm basically thinking of it as is like Tom Howard with his SRS and then anti-SRS. So it capitalizes on certain variants of the standard strategy anyway, but just in a bit of a different fashion. So for example, with the standard strategy, what we needed to look at, what we needed to look for based on the universal intent to trade that was poised to exist as of 7 with the prices what are available, and basically which we form as a result of dissecting the sort of way and degree that conviction is imbalanced when trading the underlying product at the prices that are available as of 7 has existed like and exists like with the prices the market sat at as of 7 like throughout time frames top down. So we'll look at the daily, see how traders are trading like over the daily. I wrote about this morning in the gym, not on YouTube but on my chart, of how the current daily push that's in play, like the trend of what predominant way market participants had been interacting with the prices that were available to do so over daily time periods, like the degree to which one's intent and interest was imbalanced at was is waning and falling off basically. So and the market isn't going to be sat at any better prices, so it's like the intent to trade with that's been unraveling in that manner that it has been up to now is likely to just progressively wane over daily time periods, but there is still possibly some steam left in that daily trend. So what we're doing is we're just assessing how each time frame participants are likely to continue trading, like aka assessing how the push is in play relative to each of the time frames we assess, are poised to continue pushing, etc., 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 and then basically form the bias by then what the most probable direction is poised to see market participants interact slash pair up slash trade the underlying products prices available as a 7 like and lead the market to primarily push like. So remember, I am short now, and I've showed this in Andrew's Discord. Um, like that's where I post it. You know, I could get absolutely ripped, here, but I don't know. I mean, I'm just following my approach. You know, I'm not like just neutral. You know, I'm not like yeah, like we are literally assessing info neutrally. So we are look like it's like have traders traded in a way that's presented info within the price bars that are made up of how traders are willing to trade like, that shows they are heavily convicted to predominantly pair up with one side of the market over certain time periods, meaning like for example the 3 hour, the 9 hour. It's like have they been very like, and how has that intent lasted up to the prices that the market sat at as of the most recent bar open? Like, do our participants likely to still remain as biased as they previously had been with similar prices that are similar to those that are available to pair up with now, that resemble the same sort of prices that we've already seen and witnessed and observed how market participants on this occasion were inclined to pair up with those prices that facilitated whatever way the market structured relative to the in-play at and push being comprised of each of the bars that are in the in-play at and push, making up the overall form of that push's trajectory and configured state basically, and how that pushes from its current setup state is likely to continue pushing. So it's like it's likely to continue pushing before it like arcs out more, you know. Of course, that's like I was just doing that here, but then here how they trade like here amongst the existing structure of the in-play trend, it's showing a bit of signs that they may no longer exist and tread with the same sort of imbalanced conviction as they had been doing so in this region of prices that the market sat at, and you know, and then basically that degree of which side the market was being interacted with, which we see was to the downside predominantly over 2 hour time periods in this case. Like it's no longer going to be sat at like those prices on that same occasion again, and then the way that like they've kind of transitioned into trading like here with the market with the price the market sat at, like they're starting to now favor the opposing side of the markets, the opposing side of the market while sat at these right prices. It's likely that like that's only gonna grow, but and basically that inclination to trade with the side of the market that's been like left alone is now creeping up again after basically traders have got tired of trading in that one-sided way they had been recently doing so. So they got tired and then it kind of dropped off, waned, and then the opposing side of the market became attractive to pair up with here, and then it's likely that it could bottom out a bit more and then retrace, and then what do you know, that's literally exactly what happened. So anyway, what we were looking for the standard strategy, like I said, it's just a derivative, is so relative to CFD chart. Well, we're looking at this and we marked up the high to the low. Oh, well, actually, this is the 2 hour, so no, it didn't. But yeah, the 2 hour kind of showed signs of that possibly intent to trade with the price of water available as a 7, or likely to be possibly inclined to buy, but then obviously you've got that big heavy sell intent, but like conviction looming over, or whatever you would call it, like hanging around basically like a dark cloud with the price of water available too, and like those prices that the market set at too are likely to be perceived as of worth to pair it with on the sell side, like that are prices sat snug amongst an existing 3 hour trend that's likely in setup as of the sort as a result of how traders trade, like to continue pushing basically, not basically, factually. So anyway, this was the most recent bar close, I'm pretty sure. No, it wasn't. Yeah. Oh no, it was. What the fuck? Oh yeah, it was 6. Okay, so um, the appropriate fib pull relative to the iffiness also of the given day's direction that they playing out was, see how buy the trade, like, yeah, it was like definitely a good trade this morning, the 9 hour, the approach 3, I'm just gonna call it. But I would probably say, um, I think that's, to be honest, what I would do is I would just mark it up and keep, like, I'd mark the fib up, right, and I'd just keep in my head, okay, well, how strongly convicted are participants likely to be with the prices what are available, with interacting with the prices that are available as a 7, like, and then also mark that up with the 15M fib pull, because, like, you've got some signs of possibly retracement unfolding relative to the 2 hour, right, but then the 4 hour, 3 hour, and then the 9, the 8, and then there's not really a conviction to trade relative to 12 hour time periods. It's just kind of like decreasing gradually. It's likely that like it is poised to just retrace, but it's like then with the 1 hour, how would be most appropriate to see it set up? I would honestly probably say, like, I mean, if I just get on this chart. So yeah, the weekly, if I just drop down through all the time frames, the 3 day, that is quite bullish. It looks like intent to trade's kind of been maintained to some degree with 3 day time intervals. But then you can see here it's starting to wane to some degree anyway. Signs have showed too. I know that this bar was primarily comprised of participants being inclined to buy at this region, but then you also consider like where that region of prices the market is sat at after participants have already like expended the sort of intent and interest and enthusiasm and stuff of how they've traded, like an inclination and up to this point, and like it's a bit iffy to be honest. But yeah, 12 hour, you kind of you wouldn't even acknowledge this because you kind of got some like further structure that's kind of formed. And then this is like the push you would be analyzing relative to the 12 hour, because you analyze the in play pattern push. You don't just like eye it. You focus on what's happening now. Anyway, you can kind of see that this push is kind of losing strength to some degree, especially also considering like how the traders relative to the daily time frame are trading like. But then anyway, yeah, you just go down again and you just see that like, okay, 8 hour, like how participants are convicted to trade with the price of water available as a 7, with also considering how the 12 hour intends been unraveling, decreasing on the buy side, and then the 8 hour is strongly convicted to trade with the sell side, meaning like participants over 8 hour time intervals, how they've been trading, like it's strongly convicted on the sell side. 7, same thing to some degree, but the most weight is on the 4 and 8 on the futures time frames. Yeah, and then the 2 hour again, same thing, but then you also do have to contend with the fact that the market is sat right at the very lows. So that's why, like, relative to the selling strategy, and then like you do have some sort of buy side inclination relative to the 3 day, of course, which you would take into consideration. So I mean, to be honest, I, honestly, yeah, I would honestly look for this, which I'm pretty sure was the 15M appropriate fib pull. Um, okay, so the trade's actually going well. I can't remember what time frame my position 2 was placed on. Oh shit! I've just realised we might actually be going short on GU. Uh oh. Oh god. I wasn't looking, paying attention. No, 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 no. We're good. We're good. That's unlucky. I've done that before. I mean that's not unlucky. That's lucky. Anyway, I don't know what time for it, what chart perspective my position two was placed on, but to be honest, I mean based on the based on the iffiness of the given day's most probable direction poised to prevail over European and modern trading session actually playing out. Well, we've definitely. Where the fuck is my um like stuff? Where's my chart drawings? Like for fucking hell's sake. Um. Fucking hell, man. Hang on. Oh, I think it's because it's yeah. Yeah, I almost said something else there. Right, balls. Well, I guess we can just draw it on here anyway, so it doesn't really matter that much. So anyway, what I've got drawn is I've got like this was all done real time. I'm pretty sure I've got the screenshots. This would be pretty nice to be honest if we got a nice win to start first trade. But what was for darn sure the right thing to do was the stop loss placement. So there's the higher hand, and then relative to the iffiness of the given day's most probable direction playing out over 7 till 10, we place our stop. You don't just keep like what I was making the mistake of previously stupidly was I would just look to the left, see a sus high, and then like fucking go to the left, see sus high, move it up. I'm like, bro, like you've got a given day's bias for the given day on the basis of how traders have been trading like up to 7, like and it's like it has to be placed on the iffiness of that. I've actually got basically that I made that mistake on my last trade actually before I went away, and yeah, it happened to be a loss anyway, but one sec, I'm just gonna make this easier for myself and just mark up, maybe just have it like that. No, can barely see it. We'll put it on 4. To be honest, can barely see it. And then what we'll do is we'll go to the blue. I'll just say that. Hmm. What about that? Is that seeable? It's not really seeable, is it? Yeah, we'll have it on that. So that's 1, 2, 3, 4. So I'm just marking up on my other one. 1, 2, 3, 4. I think. Oh no, we've got 4 in between. So we've got this one. So 1, 2, 3, 4. Yeah, and then we'll just have it on. And then we'll just have this on this. I think it's that. Yeah, it is. I think. Let me check. Yep. Okay. Save. And then I'm just gonna save it as default and also just on. Oh, actually, hang on. No, right, fuck it. We'll just keep it on there. Save chart. Okay, so what I was making the mistake of was doing was, like for example, I would look to the left and then I'd see like like I basically wouldn't consider placing my stop loss on the basis of the iffiness of the given day's direction playing out. So it's like if participants are heavily convicted to pair up with a certain side of the market as of 7, and that degree of imbalance conviction is likely to be like prominent and very one-sided, and market participants are likely to favour one side of the market very heavily based on how they've done so up to 7 relative to the time frames you're considering. Being for me, this is a standard strategy. It's 1 hour's dictatory, meaning that dictates how I look to see the given days bias, like how I look to deal with the given days bias, meaning like how would I look for the 1 hour setup, then look for the ISLQS intra-session liquidity sweep, and then I'd look at and then and then the 2 hour kind of influences how I look for the 1 hour to set up, and then the 3 hour is my 4 hour time frame on the CFDs, and then the 4 hours the 4 hour on the futures, and then but I do also look at the 4 hour on the CFD chart, and then the 7, the 8 on the futures, and then the 8 and 9 on the CFD, and then the 12 is a good one, and then the daily, the 2 day, 3 day, 4 day, weekly, 2 week, monthly, and then all the way up to the 12 month. But like, of course, I would be just analyzing that sort of behavior slash pattern in the way trades been trading like over those relative time periods, and what trend is in play with the price of the market sat at right now over those time periods that's in play right now, and for that to play out relatively to the time frame being studied, because it's like within a 12 hour trend with a 12 month or 12 hour or 12 minute trend to the upside on significantly lower time frames, there's going to be ups and downs and peaks and troughs, which you can like kind of understand when they're going to play out based on the structure of those like next step lower time frames, right? So anyway, like I wasn't like placing my stop loss on the basis of like the iffiness of the given day's bias playing out, right? So it's like, yeah, you don't want to have your tight stop like this, but so then what you do is you look to the left, you look, and then you see, okay, well that's a sus high, and then you basically look for the first zone to the left relative to the iffiness of the given day's bias playing out, to place your stop, right? So it's like, for example, on this given day, it's very the market participants are very have showed a strong degree of imbalanced interest to pair up with the sell side of the market, with the prices that are with prices that that resemble those what are in the vicinity that the market's trading at right now, as of 7-2, and to a certain point as of 7, in a strongly convicted manner. So, like, yeah, and there's not really any other buy like side interest, so it's like strong. So therefore, you just look for the clean zone to the left, right? As of the time of the entry setup, you definitely wouldn't want it there. It's right below a clean zone, and then you mark it, and then you place your stop relative to the clean zone, and then you also mark up your playable range, which can be relative to the 15 minute or the hourly. And then if you can't get a 1-to-1 to around this region, meaning the lows of the 15M playable range or 1 hour playable range is kind of the same thing at the time of an entry setting up, you simply mark the price point or drag your position tool to the price point that you can, and then you'd look to enter there, stop accordingly, and then TP, right? So yeah, this trade is definitely valid, but I'm a bit confused on this playable range thing, I have to say, because like, you know, it was because you mark up your appropriate fib pull, which like for the 9 hour 3 hour approach 3 is like, which of course is just a strong trend that's in play relative to how traders have been trading, like, meaning that pattern with how they've been trading, like, that's presently in play and prevalent over 3 hour time periods up to 7, and likely to continue. That is backing up the 9 hour, the way that participants have been inclined to trade, like with the 9 hour, which is likely to also continue being in the same fashion based on like how they've traded, like, and how strongly they traded in that way, and how those prices that are available as the next bar close, which you're seeing whether it is likely to be the case by using the 3 hour to back that up, has like been strongly convicted with one side of the market, and those prices resemble those of what like they had been previously, most recently on this occasion, strongly convicted to interact with, like, and like they resemble the same. So I'm just gonna lock this video in, to be honest, because it's quite good and I don't want to lose it. So one sec.